I'm Catherine Ross, and I'm here live from the NYSE with Jim Cramer. Jim, let's start off by talking about the markets.
Sure.
Yesterday, over on Real Money, you wrote about how you're torn between whether or not we're in 1998 or 1999.
Right.
What about this market has you seeing froth?
Okay, well, there's a couple companies that I like to make fun of, and I don't mean to, but it just has to do with the fact that when my daughter, my fabulous daughter, who turns 28 later this week, when she was in San Francisco with me, we were looking at buildings, and there was Zscaler, and there was Okta, and there was Zendesk, and she said, what do each one of these do? And I said, they go up. And she said, well, what does that mean? I said, well, they have stocks that go up. She goes, but Dad, like, what is the actual product that they do? And I said, no, you have to understand, there's a group of money managers who don't really care about that. They want to buy stocks that go up. They're called momentum managers. And that's who's in charge right now, whether it be Alteryx, which someone asked me about yesterday, whether it be a stock, PagerDuty, whether it be ServiceNow. These are all Splunk. They all come under the same category, which is there's a lot of people who own them and they don't know what they do. Now, I think that is really hard for most of our viewers at home to believe. Our viewers tend to think that this is a game of rigor and a game of intensity. And the idea that anyone would own a stock like Okta without knowing that it's the best authentication play, it is just ludicrous. But that's wrong, because many managers own via ETF. And if you look at what's in the ETF, it's the RTH. Okay, well, that's fine. That's Amazon, that's Walmart, that's Costco, and we totally get that, okay? But if it's one of these higher falutin, high growth ETFs that also include stocks that have just come public, then they are a melange of companies that people don't understand. Go back to 1998. If you look at the IPOs as they came, they became more and more obscure. Now, the difference is they did not have revenues or earnings. These companies have revenues, and these companies are very high quality. That said, there's a level where we can't pay for them, and if we do, then we have to recognize that we're doing so at our own peril. And there are a substantial number of stocks that we're buying, that the market is buying at their own peril. Against that is a Walmart, which is fine, a Costco, which is fine. So you want to be aware that there's a frothy part of the market that I would love to see come in and be restrained. And there's another part of the market which is too cheap, but everybody's worried about. The banks, people are worried about those. The drug companies, they're not expensive, they're fine. But the part that I'm worried about are the companies like Zscaler, which is a fantastic cloud-based security company that is being challenged by CrowdStrike. And I think CrowdStrike sounds like something where the crowd's on strike, and yet people own it.
I gotta agree with you there. I saw, I was just at LaGuardia Airport, and I saw that CrowdStrike had a bunch of different ads, and I was so curious about, like, that it looked great. I mean, the ads are beautiful, but it really, the name itself doesn't describe the business, but the ads do.
I once, I'd say 44 years ago, ran a wildcat strike. CrowdStrike, wildcat strike. I guess that makes me a portfolio manager.
There we go. All right, Jim, let's talk about Real Money stock of the day, which is PepsiCo. They released earnings this morning. They beat expectations. And one thing that I really thought was interesting.
You know, typically it goes up. I always tell people to wait. Do they wait? No, they buy it up. It's painful, isn't it? Isn't it painful, the process of watching people lose money? I mean, it's like watching a bank robbery. It's like, here, give me your money. Oh, okay, here's my money. If people were to just wait, digest the conference call, maybe even make some calls, think about it, could be good. But again, my new, one of the theories I'm working on for 2019, besides just the summer sustainability, is the summer idiocy and the complete lack of rigor by people who take action before they should take action. Ready, fire, aim. It's almost World War I like. They're going over the top to get where? To get shot.
Well, I would say that your bank robbery, when we first saw the results and Pepsi popped, it's almost like people are throwing the money instead of just handing it over.
Well, yeah, I mean, look, there are certain companies right now that are anointed and go up on days when interest rates go down, and PepsiCo's been one of them. to be sure, there really was not. I mean, if I wanted to nitpick what was wrong with PepsiCo, I didn't like Mountain Dew. That number wasn't so great. I wish that Gatorade was a tad stronger. Gatorade was too weak. I feel that even though people are talking about bubbly being big, that's premature. I mean, that's like not as big as I thought. I didn't like the way that SodaStream hasn't really been effective in the United States. They made this acquisition. It's kind of a so what acquisition over in Europe because of recycling and because of the idea that you can make your own seltzer and spike it. Spiky seltzer is the biggest thing going. By the way, Boston beer, Sam Adams, that's a PepsiCo guy who's done the spiky seltzer that's doing so well. Those are my nitpicks. Against that is an acceleration of both Frito-Lay and acceleration of beverage.
I'm glad that you brought up Frito-Lay.
I mean, what's not, acceleration of Quaker Oats?
That's what I was going to ask you about. So with these organic revenue growths that we're seeing in Quaker and in Frito-Lay, are snacks back?
I don't think snacks ever left. I think snacks are an ethos now. The overused term millennials like to snack. They like to eat 6-7 times a day. I don't know who their cardiologist is. The collective cardiologist of the millennials must be just a quack, right? Dr. Quack in a bush. But I do think that they've correctly captured a particular zeitgeist, which is heat. Now, I had International Flavors on Andreas Fibbig, who's a genius, and he talks about, this is on Mad Money, he talks about the notion of what flavors people really like. And they like hot, and PepsiCo's done that. PepsiCo's using a lot of big data to be sure they have the hot where the hot should be. No more anecdotal, no more like, hey, I'm a salesman and I cover Dallas and I think we ought to have more hummus. No, I think they would probably call it hummus, right? Like hummus. And what happens is that now they can say these 9 stores have desire for hummus. By the way, dollar stores are doing a lot of business with PepsiCo. I thought the best read-through if you wanted to make money today, Dollar Tree and Dollar General. My wife would not let me go to Dollar Tree this weekend to get my Mylar balloons.
Why not?
She hates me.
I'm sure that that's not the case.
Well, I mean, to deny me one of my most favorite things.
I do know how much you love Dollar Tree and Dollar General. All right, Jim, let's switch gears. Let's talk about Apple. Now, Apple had a downgrade yesterday from Rosenblatt.
Is Apple up yet? I mean, these stooges who were selling Apple, they didn't realize that it wasn't just the Morgan Stanley REIT that the service revenue is going to be good. It is more that the JP Morgan piece talking about actual iPhone sales be good. Now, I want expectations to be as low as possible, and I really want Apple to start talking more about healthcare. It's incredible. The storyline that when you hear about Apple is inevitably, is Tim Cook Steve Jobs? I mean, I can't think of a more worthless storyline. He's not. You see, he's Tim Cook. And
or
is
Tim Apple, depending on
is
who
he
you
a
ask.
technocrat? No, he executes. See, only at Apple would be an executive who executes so well be regarded as a technocrat. If he were an executive at the other Fortune 499, we would call him a superior executive who knows how to execute. But here he's a technocrat. Well, the technocratic Tim Cook needs to marry the watch with the healthcare system. And when he does that, whether it be when you see that you have AFib and there's a warning and it goes right to your hospital and the hospital records all speak to each other and you're unconscious and it says basically that you should be taking Eliquis and it reads through because it has big data which says that Eliquis is the best drug to take for AFib. That's a legacy. And if he did that, now you say like, well, Jim, who the heck are you? I don't know. A guy who's been around, like to think myself as thoughtful, and certainly a person who likes to come up with ideas. But you know, Apple's not inclined to say, oh, you know what, we just heard Jim Cramer say that they should line up the AFib watch with the Mayo Clinic and put in Eliquis, because that's not the way Apple works. Now, is anybody else like that? I mean, behind the scenes, yeah. A lot of them are.
Wait, so I want to rewind for a second.
I've been around longer than they have.
There's something that you just said that I want to ask you more about. you said that Tim Cook needs to build a legacy based on the watch. But
no, on healthcare. He said
healthcare.
He came on Mad Money, and he said healthcare is going to be his legacy. So what I like to do is, rather than be, and this is a big difference between me and most of the people who follow Apple, I like to be constructive. So constructive to me means it's something that I learned a long time ago from like 4 CFOs ago from Comcast, my current employer. There's no give without a get. So if you want to get the interview with Tim Cook, you should give something. Now, that doesn't mean you could sit there and you could bash him, which is stupid as all get out. Or you can say, hey, Tim, I've been thinking, when I go, there's this Epic software. All the doctors to me complain about Epic software. It doesn't speak to another kind of software called Cerner. Cerner's for sale. Why not buy Cerner, give away the product, and then make up money by charging $10 a month to each customer? And then why don't we figure out the long-term value of each customer by we putting the service stream of music and the service stream of gaming, service stream of cloud backup, and let's figure out what that customer's worth, because the customer satisfaction is 98%. And what happens is when I mention that, I get a polite, but I did lobby them for 2 years to break out the service revenue, to the point where I knew I was overstaying my welcome. And you can always sense that by that stunned silence when you suggest, well, how about that service revenue? The service revenue? That stream? When you get that, you recognize that you've overstepped. But I don't think I can, I'm being constructive. I think you overstep when you are destructive. So I'm trying to get them to focus on a consortium of healthcare that I'd like to put together, which is just obviously some sort of Napoleonic complex that I have. But I'd like very much to be able to make it so that Apple is at the center, because their privacy work has always been primo. Apple's at the center of the new healthcare, and I believe that can happen.
All right, Jim, thanks for joining us.
Of course.
That's all the time that we have for today. If you're watching over on TheStreet.com or on Facebook, we are now hopping over to our Action Alerts Plus daily rundown video over on ActionAlertsPlus.com. I'll see you guys tomorrow.